Hello, my name is Casey McPherson, and welcome to the Colorado Main Street Program presentation, Achieving and Maintaining a 501c Tax-Exempt Status. This presentation was created by the Colorado Department of Local Affairs as an online resource for Main Street organizations seeking a federal tax-exempt status. Main Street is a program developed by the National Trust for Historic Preservation and, in Colorado, is managed by the Department of Local Affairs and funded by a grant from the State Historical Fund. As an umbrella for historic preservation and community education, Main Street is usually housed in a 501c organization and uses promotion and preservation of cultural heritage and architecture to reinvigorate a town center and economic core. This presentation was born out of a situation where Colorado Main Street organizations were experiencing varied results in achieving a 501c3 tax-exempt status. Some succeeded, some failed, and some ended up filing under a different 501c designation. This presentation will discuss the process of achieving and maintaining a 501c tax-exempt status, focusing on 501c3 and providing a few case studies to serve as examples of the process. This presentation has two main components. The first part will cover application requirements for likely statuses and also take a more in-depth look at applying for the 501c3 status, because C3 is arguably the most appropriate for Main Street organizations and also is the most difficult to achieve. This section will end by covering a few case studies from Colorado Main Street organizations that have been through the IRS process and either succeeded, reached an unexpected outcome, or failed to achieve C3 status. The second part of this presentation is a very brief discussion of how to maintain a tax-exempt status. As an initial matter, please note the disclaimer that this presentation is not intended to be construed as legal advice. Achieving a tax-exempt status. As an agenda note, because C3 is arguably more suitable and desirable for a Main Street organization, this presentation will discuss applying for a C4 and C6 status briefly before focusing the bulk of the discussion on achieving a C3 status. If your organization seeks a C4 status, you need not apply formally so long as the organization actually meets the requirements. The only strict requirement is that the organization must file an annual information return, meaning Form 990, regardless of formal status. Next, if applying for a 501c6 classification, file a Form 1024, and the only advice for this brief to-do list is to carefully follow all 1024 instructions. Because most Main Street organizations apply for 501c3 status, this discussion will be much more detailed, and so here's a roadmap of procedure points we'll cover. First, be diligent with an eye to detail when filling out and filing Form 1023. Second, work carefully through the narrative description, which is Part 4 of Form 1023. Third, ensure that the application demonstrates that the organization meets various IRS tests and other requirements. Fourth, avoid common pitfalls. And finally, consider certain tips. The first point in the roadmap is to carefully fill out Form 1023. Form 1023 is what you should file with the IRS in order to apply for a 501c3 status. In order to avoid inviting clarification questions from the IRS, which will delay the granting of your status, make sure to completely fill out Form 1023 and follow all instructions. There are a number of resources to help you do this. Probably the best resource is the IRS website. On that site, you will see a link to the page that has additional links, including a step-by-step guide to applying, the 1023 application form, and also instruction document for filling out Form 1023. You can find a link to that page both at the bottom of this slide and also at the end of the presentation on the resources slide. Next, make sure to include both bylaws and articles of incorporation. Articles of incorporation are the organization's organizing documents, meaning the legal instrument by which the organization is formed. Bylaws are the organization's internal operating rules. Federal tax law does not require any specific language in the bylaws. Articles of incorporation, on the other hand, do carry provision requirements, which merit a couple of slides of their own before we discuss how to deal with the narrative description of activities. The two important IRS tests to know are the organizational and operational test and the political and legislative activities test. The organizational and operational test requires that the organization operate exclusively for an exempt purpose. Being organized for an exempt purpose means the organization stated the exempt purpose in the Articles of Incorporation and bylaws. Make sure to limit the organization's purpose to one or more of those described in 501c3 and refer to that section expressly. Being operated for an exempt purpose means that the organization describes the programs and activities in terms of the exempt purpose. Note that all activities must further an exempt purpose and non-exempt activities must be insubstantial. The political and legislative activities test deals with the fact that 501c3 organizations are absolutely prohibited from all electioneering activities. The organization must not, as a substantial part of its activities, attempt to influence legislation or participate to any extent in a political campaign for or against any candidate for public office. In other words, the organization must not pick a side and fight for it. A narrow exception is made for those activities which are nonpartisan and purely educational. Political activities and legislative activities, commonly referred to as lobbying, are two different things and are subject to two different sets of rules and have different consequences for exceeding the limitations. And the rules applied to a given situation depend on several issues: type of tax-exempt organization, type of activity at issue, and scope or amount of the activity conducted. The Articles of Incorporation must include several provisions. Now, since this is the Colorado Main Street program, I'll note that these aren't camping provisions, but text that the IRS requires in C3 organizations' Articles of Incorporation. First, the organization and operation provision will meet the organizational and operational test. This provision should limit the organization's purposes to exempt purposes set forth in Section 501c3 and must not expressly empower it to engage, other than as an insubstantial part of its activities, in activities that do not further those exempt purposes. This requirement may be met if the purposes stated in the organizing document are limited by reference to Section 501c3. Second, the No Private Benefit Clause means that no part of the organization's net earnings inure to the benefit of private shareholders or individuals. More specifically, the organization cannot permit assets or income to accrue to insiders. An insider is a person such as an officer, director, key employee, founder, or certain family members. Examples of inurement include payment of dividends, unreasonable compensation, and transfer of property at a lower than market value rate. Inurement can lead to intermediate sanctions, like an excise tax or revocation of exempt status. Third, because assets of an exempt organization must be permanently dedicated to an exempt purpose, in the Articles of Incorporation contain a dissolution clause ensuring that distribution of assets for an exempt purpose in the event of dissolution. This means that if an organization dissolves, its assets must be distributed for an exempt purpose described in Section 501c3 or to the federal government or to a state or local government for a public purpose. Fourth, include a public interest provision stating that the organization will operate to benefit the public and not the private interests of a limited number of individuals. Next, consider this list of additional provisions. Income distribution means that the corporation will distribute its income for each tax year at a time and in a manner as not to become subject to the tax on undistributed income imposed by Section 4942 of the Internal Revenue Code, or the corresponding section of any future federal tax code. Self-dealing means that the corporation will not engage in any act of self-dealing as defined in Section 4941D of the Internal Revenue Code, or the corresponding section of any future federal tax code. Excess business holdings means that the corporation will not retain any excess business holdings as defined in Section 4943C of the Internal Revenue Code, or the corresponding section of any future federal tax code. Investments means that the corporation will not make any investments in a manner as to subject it to tax under Section 4944 of the Internal Revenue Code, or to the corresponding section of any future federal tax code. Finally, taxable expenditures means that the corporation will not make any taxable expenditures as defined in Section 4945 of the Internal Revenue Code, or to the corresponding section of any future federal tax code. If the organizing document does not contain these provisions, an organization should amend it. And for examples of provisions that meet these requirements, you can find sample articles of incorporation on the IRS website, a link to which is on the resources slide of this presentation. However, ensure that you adjust any model document to your specific organization and activities. Now that we've covered the Articles of Incorporation, the next 1023 piece to give some careful thought to is Part 4, the narrative description of activities. Part 4 provides the opportunity to describe how the organization will operate, fitting into exempt purposes. The model response of this description will communicate several things, the most important of which are listed here. As an introduction, describe the organization, its purpose, and the geographic area in which it operates. Include maps if they're available. Next, explain the circumstances that gave rise to the organization. If there was a physical or economic deterioration, explain it. Then, as a primer for exempt purposes and activities, emphasize that education is the primary purpose of the organization. And, as far as you can, describe the organization's activities in terms of public education. Next, if the organization has already acquired an exempt status from the state, discuss that because it may have persuasive impact on the IRS. Now, explaining the four-point approach is an option that must be handled with thought and care. To ensure that the IRS doesn't misunderstand the four-point approach as an economic development-oriented method, make sure to describe activities as primarily focused on education, yet containing other supportive activities such as promotion and economic development, but that those are merely supportive purposes that are carried out under the umbrella purpose of education and serving the main goal of historic preservation. Because this can become convoluted, it can be a good idea to organize the explanation of your activities around the charitable purposes. And, because this deserves extra attention, the final points of discussing charitable purposes and economic development merit slides of their own. Listed here are 4 charitable purposes that best fit Main Street organizations. And, despite the goal of Main Street organizations to encourage a vibrant downtown, which likely includes a revitalized economy, it's very important to note that economic development is not a charitable purpose. So, let's talk about how to deal with the charitable purposes in your application materials before tackling what to do if economic development arises too prominently. First, make sure to organize around the charitable purposes, describing the supportive activities to the level of detail that includes percentage of time and resources devoted to each activity. For example, public education can be supported by teaching the public about town history or giving architectural tours. Lessening the burdens of government can be supported by community cleanups or managing farmers markets. Historic preservation can be supported by preparing surveys of historic properties. For example, preserving historical or architecturally significant buildings is an inherently charitable purpose, recognized by the IRS in Revenue Ruling 75-470. As a note, combating community deterioration can be supported by many activities, but must occur in a blighted area. Blighted means that the U.S. or state Blighted means that the U.S. or state HUD gave a formal designation or the IRS assessed the area using a number of factors such as vacant buildings, unemployment, and economic depression. Finally, economic development is not a charitable purpose. However, it does result from Main Street activities. So let's discuss that in more detail. Whether your organization is following the standard Main Street program route and needs to carefully explain economic development, or it would like to emphasize that result more, but not so much that it ought to be a 501c other than a C3, it's important to know that the IRS will carefully scrutinize any application that contains economic development language. First, recall that Main Street programming often results in economic revitalization because the organization focuses on improving the appearance and vitality of downtown. Second, as you structure this discussion, clarify that the purpose is an exempt one, with supporting activities where economic revitalization is an incidental outcome and benefit, but not the goal. For example, one of the charitable purposes is public education with supporting activities like a historical walking tour, where economic revitalization occurs as an incidental outcome and benefit, where tourists buy things from shops along the way. Third, consider your wording. Ensure that you are emphasizing events being open to the public and geared toward public education. Also, if appropriate, economic development can be described as a tool used to achieve a charitable purpose. Finally, if your organization decides that economic development is one of its goals, but again, not to the point that the organization ought to be a C3, or rather ought not be a C3, then the IRS may consider it permissible so long as it furthers an exempt purpose. Economic development could support a charitable purpose like the four we discussed earlier: education, lessening the burdens of government, historic preservation, or combating community deterioration. Next, economic development is an acceptable goal if the organization is assisting a disadvantaged group with employment opportunities or addressing blight. Finally, so long as they are, note that business assistance activities can be described as educational. Now that we've gone through a model response for the narrative description of activities and a deeper discussion of charitable purposes and economic development, let's talk about common pitfalls and IRS red flags before moving on to some tips to succeed. Common application pitfalls include failing to carefully follow all application requirements. Make sure to keep a copy of the 1023 application instructions referenced earlier in this presentation by you as you fill out the form. Second, demonstrate an understanding of the difference between articles of incorporation and bylaws. Again, the articles are the governing instrument, the instrument by which the organization is created. Bylaws are merely rules of operation. Third, walk the talk. The IRS carefully examines all submitted materials, organization websites, job descriptions, and other records. The content of those records and materials is just as important as the application statements. So, be careful of model applications and ensure that your application matches your activities. The next few pitfalls we have discussed at some length. ensure that these prohibited activities are not part of the organization on paper or on the ground. Unrelated business income is a prohibition of C3 organizations to regularly carry on a trade or business not substantially related to their exempt purpose. Examples are advertising and sale of merchandise or services. Exceptions include volunteers, selling donated articles, and bingo. Make sure to include unrelated business income on Form 990, 990EZ, or 990N. Finally, beware of appearing as a business promotion organization. The IRS easily confuses Main Street organizations and chambers of commerce or retail merchant associations. The IRS also easily confuses economic development and considers it to involve providing financial and subsidies that benefit a class of businesses. Economic revitalization is not a recognized charitable objective. However, it often occurs as a result of Main Street organizations' efforts. Ensure that your organization discusses carrying out charitable objectives like combating community deterioration through downtown improvement, historic preservation, and educating the public, including, but not limited to or focused on, the business community. In addition to common pitfalls, the IRS will especially scrutinize applicants whose mission includes any of these bulleted items. Make note of these and ensure that your application avoids them, deals with them appropriately, or contemplates an exempt status other than a C3. In order to avoid the pitfalls and red flags, here are some application tips. In case your application falls into a pit or raises some red flags, don't panic. This application process is much like playing the board game Chutes and Ladders. There is a definite end, but at certain points you might be sent back to an earlier point before you can continue forward. Just don't lose hope that you can still win the game. First, know that the likely result of an application found lacking will be that the IRS sends probing questions to the organizations. Whatever is missing can be cured by responding thoroughly to those questions. And, as a result, the IRS will grant, deny, or suggest applying for an alternative exempt status. Let's take a look at what happened to some organizations in Colorado that reached these different IRS responses. The first anonymous Colorado case study is a status denial. In this case, the organization existed as a C6 but wanted to shift to a C3. The organization applied for a C3 status using its C6 tax ID, to which the IRS responded that they already had a C6. Next, after some back and forth, the IRS concluded that the organization had not substantially altered its mission or activities and should remain a C6. So, sometimes you're heading down a road, but it comes to a sudden end. The takeaways from this case study are to make sure to change the language of your organizing documents before you reapply for a different 501c status. Also, consider if your mission has truly changed and is charitable under Section 501c3. Finally, consult a tax law attorney or certified public accountant to aid in this often squirrely process. The next anonymous Colorado case study is a status shift. In this case, the organization applied for a 501c3 status but failed to adequately discuss charitable purposes and used language that smacked of action organization, indicating that the organization sought to influence local legislators or participate in charitable activities that benefited only the local community. In the response to the IRS questions, the organization edited its narrative, but included a development-focused discussion and failed to provide criteria for activity evaluation. As a result, the IRS sent additional questions about how the organization would achieve its exempt purposes and requested a map of the downtown district. After receiving the second response, the IRS suggested that the organization focused more on development and discussing increasing foot traffic and awareness rather than public education, apply instead for a 501c4 status. The organization agreed and successfully achieved a C4 status. So, know your purpose and goals. That is where the pre-application discussions come in handy. The final anonymous Colorado case study is a status approval. Here, a significant amount of back and forth happened and still resulted in success. The organization applied for C3 status but failed to include 3 of the necessary provisions in the governing instrument, the Articles of Incorporation. The missing provisions were the dissolution clause, the statement that the organization would not do things not permitted under 501c, and that the organization would be organized and operated exclusively for a charitable purpose. Additionally, the organization failed to fully describe its activities. The IRS requested that the organization, in the narrative description, give a percentage of time and resources devoted for each activity, including a detailed description of the activity, programs to support the activities, and how each furthers an exempt purpose from the IRC 501c3. The organization cured the situation by including all requested materials and information. Notably, it responded to concerns about economic development by including a regular review of fund usage with predetermined, measurable criteria and discussed events in terms of educating the public. Ultimately, the organization achieved a C3 status. The second part of this presentation is maintaining a tax-exempt status. The basic maintenance steps are few and simple. First, make sure to file an annual report of activities by submitting Form 990. Second, disclose any and all changes in purpose, character, or method of operation. Third, list any changes of names or addresses. Fourth, ensure that there's no deviation from exempt purposes, no lobbying, and no private benefit. Finally, meet the public support test. Meeting this test means ensuring that no more than 1/3 of any year's contributions came from donors whose gifts exceed the equivalent of 2% of the past 5 years' gross revenues. As a final matter, here's a list of resources that will be helpful moving through the conception, application, and operation process. The most useful resource might be the IRS website. I would highly recommend spending some time navigating around that site.